All right, guys, let's get into a lot of news that's happening here. Gary Gensler is knocking at the door of many exchanges and crypto companies that, in his books, are being labeled as securities. Many of them have not answered, and quite frankly, they've shipped out their business to other countries who have been more open to regulation, who are more open to innovation. But these crypto projects can't really run away from the onslaught that Gary is going to be bringing onto the crypto space. We saw what happened with China open up a whip ass in regards to regulation. However, at the end of the day, look, the crypto space so far, Bitcoin in itself, has just been sideways consolidation for the past few days, hovering around the lows of $25,000 up to the ranges of $27,000. So not much of a reaction there, but there is heavy interest for the United States to get full control of crypto, monopolize it in a way that benefits them overall. They know that in order for them to launch their CBDC, there'll be indirect competition with crypto. Gary said many times, we've given these crypto projects time to come out and register, but more than 80% of them have continued not to comply and think that we can just go to countries other than the United States and do business there. Look, the fact of the matter is that as much as we like to think that the United States is falling apart, which in some cases it is still the regulatory body around the world. Just because the SEC has approved Coinbase's IPO does not mean they approve their business model. Most likely, the SEC has said that they most likely want Coinbase to give customers access to only trade Bitcoin and Ethereum. While in itself is great and you can onboard people onto crypto, however, there isn't much money to be made just from these two top market caps. Most profits are made when you offer retail altcoins, when they can degen 100 of X into a meme coin, when you can actually get into DeFi. These are what people want. This is what people want to invest in. So Coinbase looked at this and said, no, we're not going to delist these projects because you think they're securities. And Gary said, okay, let's give them some time to register. Let's give these projects the benefit of doubt and let them register. Let them come talk to us. But we will have no option if they don't. We will come and sue you. Binance and Coinbase have a big reason to why crypto is so big as it is today. It's given institutions in retail an easy way to onboard into crypto. Don't get me wrong there. But that doesn't come at a cost. Okay? Where Binance comes and starts listing all these meme coins and then they go to zero and they start complaining and saying, oh, look, I lost all my money. So Gary then has to essentially take action and try to come in with regulation. Binance is not perfect, and they have been scrutinizing against their users and trading against them, creating these trading desks. That's the least I can come up with in terms of Binance. Look, Binance has done great things overall for the space, but there's many shady things that a lot of these exchanges do in the back end. But this is why we say you have to prepare your portfolio overall for regulation. We've been discussing it for the past few months overall, saying regulation. And you have to go to projects that even if regulation comes into the space, you're not going to be affected overall. And we're even starting to see crypto.com hasn't been in the back burner overall. There hasn't been too much discussion in regards to this. And a lot of these crypto companies are essentially shedding off their business off of the United States and going somewhere else. But even then, I don't think they're going to be able to run, especially knowing that CBDCs are around the corner wherever you go around the world. All countries are preparing for that fact. And it's just going to be the way it is. I don't think that we can run away from it. And that's why we prepare our portfolios if regulation, you look at it and you say, you wake up tomorrow and regulation hits hard, right? Just as it is today. Are you going to ask yourself, is my portfolio ready? Do I have projects that I know are going to be here in the long term? Because I do. I have Babb, right? I know Babb is going to do very well because they are FCA approved. They're registered, and to ensure that they're compliant and when it comes to regulatory frameworks. They are the innovation of regulatory framework with what they're doing in terms of regulated decentralized finance. EWT, I know EWT, again, working very close with governments. So that's a big deal as well too, and big institutional players. Zen, again, first principles, going back to what Bitcoin was all about. And many other projects, guys, that are going to most likely do well even if regulation comes into the space. But 70% or 80% are not prepared for what's going to be happening. Now, yes, Bitcoin has been consolidating in these regions, and we can see that the BBWP right here, guys, this indicator indicates, look, we're coming to a very point where volatility is very low. And every time that we see BBWP go below the 10 percentile, it's followed up with a major move in the markets. And we've been discussing it in the past few months, saying, look, the longer we consolidate in this region, the more and the bigger impact that the next move will actually have. We can see that when we get below 10 percentile, even in this case, from the swing high to swing low, we can see we were met with 40% downside move. Same thing here, coming below that key 10 percentile. We were met with roughly around 18%. Same scenario here, just right before that big news back in October, guys, right? And we felt roughly around 26%. So we are due for a major move. Now, based off of our probabilities and strategies that we've been looking at and we've been discussing, again, seems like Bitcoin is not too phased overall, because it might be good overall for Bitcoin. It may not be good for overall for altcoins. Now, if we can get the stochastic to actually turn to the upside, there is a huge potential overall that we can break that $30,000 resistance that we've been struggling in terms of the bulls getting us above. And if we can turn that into actual support on the macro picture, guys, this looks phenomenally well to continue on this bull run. Again, we are putting in these higher highs and higher lows. And if we can turn that stochastic to turn to the upside, there is a huge potential where the bulls do have the ball in their court to turn us to above $30,000, guys. So again, that's basically what's happening with regulation. Let's take a look at Babb real quick, guys. So with Babb, again, what I'd like to see is that we continue to close again above the 21-day moving average. If we are able to maintain that, this is a very heavy resistance on the macro time frame. Again, there's a lot of confluence of resistance in this area, guys. If we can turn this into support, again, most likely probability is that we will be retesting the 8218 area. Now, on the weekly, we've come to very low levels of the stochastic here. And we can see that we are starting to actually turn up. We did have the cross of the moving average on the stochastic, and we're sitting just around the 14 percentile, which is very good, pointing to the upwards. This is what we want to see. Confluence of resistance in this area. Again, poised to do well. What's happening with DeFi, decentralized finance, is going to be great overall. Let's go ahead and quickly just jump on to Zen, guys. There was a huge news with Vmpx. Again, Jack iterating that he's going to try to bring in more liquidity, which Vmpx will be launching on Ethereum as well too. So if you do want to get into that, you will have an opportunity for you to participate into this. He also did discuss in regards to X1. So there's going to be a lot of burning for that, which will give you an allocation for X1. However, he did discuss that the other chains won't have the same value or burning value mechanism as you would as in Ethereum. So if you're burning on Ethereum, you do have more value, that your burns will go longer than if you were on other chains. So meaning that if you want to actually burn, it's more feasible for you to actually burn on Ethereum, because 80% of the burning value will be based off of Ethereum and 20% will be based off of the other chains. So it seems like, again, Ethereum has more value when it comes to burning. If you are burning on Ethereum, you will most likely have a more percent allocation in X1. So that's just something that he did point out in regards to that. Same thing with what happened, again, with what we're seeing with Zen. Again, the burning ratio continues to stay steadily here. Again, we went up from 20. Fear and greed index jumped up to 36 based off of the news, what's happening here. Again, we're still waiting for DBZen. I still think DBZen will burn a lot of the future supply, flatlining this chart that you guys actually see here, which will be very major overall in the long run. And we can see that the 91 to 100 days are taking more precedence, that people are actually minting for 91 to 100 days more than 361 days. This is actually a big shift that we've seen overall. However, I'd like to see what would happen once these DBs NFTs and how the mint distribution is going to be affected overall. So again, we're going to continue to follow this major news. Again, if you haven't seen that, it's on Crypto Kindness channel. And one other thing that I wanted to state for you guys is that, look, because regulation is coming into the space, guys. Okay, if you haven't followed me on Twitter, go ahead and follow me on Twitter, guys, because I do post trading calls for you. And I keep you up to date whatever happens in the regulation space. We're always discussing that. And once regulation hits full force, guys, look, a lot of these exchanges are going to be affected overall. But there's another effect to this, and that a lot of these content creators who are on YouTube and a lot of these social platforms, once regulation comes in full force, they're most likely going to be demonetized, meaning you're not going to see them, and they have to be most likely registered as a financial advisor or someone who's legally obligated, that can obligate to provide you financial advice. So with that being said, I don't think that these crypto YouTubers have much life in them, because the key takeaway into this is that YouTube, with these influencers, Twitter, YouTube, all that, has been the gateway into crypto. People learn about crypto assets, trading, and doing all these cool things from watching videos and educating themselves through Reddit and a lot of that stuff. But there's also the bad to it, where a lot of these content creators, again, lead astray a lot of their viewers and a lot of their communities to these meme coins. Again, I don't try to feed you with meme coins or any of that. I prepare your portfolio for 1,000% X gains, guys. You can do that by trading, having strategies, applying risk management, guys. Nobody in the crypto space, in terms of content creators, is going to come out and tell you that you need to apply risk management. No, they want you to degen into their favorite meme coin, pump it up, and they can actually dump on you. And this is why I like Zen and the first principle model that comes into play here. But with that being said, guys, just watch and be careful who you actually listen to at the end of the day. And if you do enjoy these content creators who are teaching you risk management, doing things the proper way, they might not be on these platforms for very long, and that's why you want to follow them on other social media platforms. So if you guys want to follow me on Twitter, my handle is Vmpx. And again, guys, as always, stay profitable. Until next time.